Hello, welcome back, guys, to our Fierce Forex for Beginners YouTube series. This is Miss Fierce from the Fierce Trade House, and this is module 7 of our series. We've done 6 already. If you haven't yet watched the first 5 modules and you're brand new to Forex, you're a beginner in Forex, you know nothing about Forex, please, by all means, make sure you go through those 6 videos first before you touch module 7. So we've been discussing various topics in technical analysis, and in this module, we're going to cover Fibonacci. But let me just do a quick recap. In the last module 6, I believe we tackled chart patterns, and we looked at 3 main ones: the ascending, descending triangles, the wedge patterns, double top, double bottom pattern, or the multiple top, multiple bottom pattern. And then I also gave an idea of easy patterns to trade, especially as a beginner. Patterns that I think are easy to identify on the charts and are easy to get into in the market and actually come out profitable. So these are ascending, descending triangles, false break or false breakout, and volatility contraction. So again, if you haven't watched module 6, please go back and watch it, okay, so that this module makes sense. Now, we are tackling Fibonacci. What is Fibonacci? First of all, let me just tell you, the person who invented Fibonacci is a gentleman called Leonardo Fibonacci, who is an Italian mathematician, or was an Italian mathematician. As you can tell, the tool or the series of numbers was named after him. First introduced to the West in 1202. However, history, if you just do your research, you'll find that there were actually mathematicians in India who were using the Fibonacci sequence of numbers as far back as 1300 years ago. Okay, so what is this Fibonacci sequence? So the Fibonacci sequence is a series of numbers from 0 to infinity. But the way they are calculated is like, if you see, this is 0, 1, 1, 2, 3, 5, 8. Then we have 13, 21, 34, and so on and so forth. So technically, the next number from the first number is found by adding the 2 numbers before it. So every time you add 2 numbers before a number. So for example, if I have number 10, if I have, let's say I have number 2 and 3, the third number will be 5. Okay, if I have 3 and 4, for example, but in this case, doesn't make sense with 4 because 4 is not part of the Fibonacci series. So let's say from 5. So if I have 1 and 2, I get 3. 2 and 3, I get 5. 5 and 8, I get 13. 13 and 21, I get 34. 34 and 21, I get 55. So that's how you calculate or arrive at the Fibonacci sequence of numbers. Now, these numbers occur everywhere, okay? And what you also notice is each number is 1.618 times greater than the preceding number. So just take out your calculator, especially those fancy ones that had extra things to calculate. If you do your math, you'll be able to get 1.618 every time you divide the numbers before it. So if you divided, if you multiply 1 times 1.618, you should get 2 rounded off. If you multiply 3 times 1.618, you should get 5 rounded off. Okay, so basically this 1.618 is known as the golden ratio. Okay, it's important to note that. Now it's also called the pi, and the inverse of the 1.618 is 0.618. So technically what I'm saying is the Fibonacci series, or the Fibonacci, on one end, we have the 1.618, and then on the other end of that line or that tool, we have the 0.618. And I'll show you guys how this looks on the actual tool that we use to analyze our charts on TradingView. Now, then we also have another ratio. So the golden ratio is one of the ratios that make up, that emerge from these numbers. And something else that emerges is the 0.382 ratio. Now, there are obviously many ratios, but these are the ones that are significant that I'm mentioning, 1.618 and 0.382. And these are derived from dividing a number in the Fibonacci series by the number 2 places to the right. So for example, okay, 89 divided by 233 gives you 0.382. 55 divided by 144 gives you 0.382. 1 divided by 2 gives you what? 0.382. 5 divided by 13 gives you 0.382, and so on and so forth. So just in case you're wondering how these numbers come about, that's how it is. Okay, either you multiply the number by 1.618 to get the next number in the series, to get and 1.618 is the golden ratio, or you divide the numbers, okay, two places to the right, to get the 0.382 ratio. Okay, now this golden ratio actually mysteriously appears in architecture, nature, biology, literally everything. And when we talk about biology, we also talk about the human body. If you were to study it from a scientific our bodies from a scientific mathematical perspective using the Fibonacci series of numbers or the golden ratio, you realize that it actually appears on our bodies. Okay, just do your research. I'm not going to focus on that because that's not the purpose of this module, but just to give you background. Now, why Fibonacci is important is because the Fibonacci levels on the Fibonacci tool or the scale act as support and resistance. We already discussed in the previous modules what support and resistance is, the highs and the lows, right? The repetitive highs and lows, the ceilings and the bottoms, whatever you want to call them. But basically, those Fibonacci levels also act as support and resistance. Okay, what do we mean? Okay, we'll tackle that as we go along. Now, there are key ratios or key percentages on the Fibonacci scale that are important to note. Okay, so I already talked about the golden ratio, which is 1.618. Then we talked about the inverse, which is 0.618. Now, when there are percentages, okay, we are seeing 61.8 is one of the important Fibonacci percentages, which is basically 0.618. 50%, which is 0.50 on the scale. 38.2%, which is 0.382. And 23.6%, which is 0.236. So you'll see the ratios on the Fibonacci tool. Okay, so when you change them to percentages, these are the levels. And the most important ones are the ones highlighted in this red. Okay, but you'll see so many other ratios on there. Okay, but just look at this one. Now, first of all, 50%, just to note, is not a fib ratio or percentage. It's just the middle of 38.2 and 61.8. So someone felt it important to throw it in there as because it's a halfway point. Okay, so it's and because they also noticed that price actually does react off the 50% level on the price chart. Okay, so by drawing lines that show the percent retracement of a prior trend, traders can better predict where future price moves might stall or reverse. So when you're using the Fibonacci tool, you can actually be able to look at where price may end up if it begins to move, or where it may begin to reverse. So remember, we were talking about patterns in the last module, and we're talking about reversals. When you look at descending triangle and ascending triangle, you're looking at continuation patterns, okay? And when you're looking at wedge patterns, you're looking at reversal patterns. So the same thing here, Fibonacci gives you the continuation levels of price and also the points at which price may reverse. Okay, so I'm really hoping that makes sense. So let's go to the charts and we'll look at this live. So I'm going to pause this share and then I want to go and share my chat. There we go. Okay, so hold on, guys. Hold on. Okay, so I'm sharing my screen again. I just had to get it. I thought I would be able to do it without having to get out of that, but possibly not happening. Okay, so here we go. Now, this is we are still on Euro USD, okay? And so I'm just giving this chart time to warm up. We can get the Fibonacci. Remember when we did our trading view training, we looked at this left menu bar here, okay, and this is where we got the Fibonacci tool from. Just I'm waiting. Okay, guys, just give it a sec. Sometimes these, so let's just scroll and scroll and scroll and scroll and scroll and scroll. Okay, so when I come here, there's a Gann and Fibonacci tools. Okay, so I'm just going to click on it and then I'll see all the tools here. So I'm interested in this fib retracement tool. Okay, so that's what I want. So I'm gonna pick it. And then the thing about this is we want to try and identify trend reversals or trend continuation. So in this regard, we are looking to predict or anticipate a trend reversal. So for example, if I was to use a Fibonacci tool right now, let me just delete that first. I want to identify the swing highs and swing lows. Now, let me just also pause a bit. Let me do something before I talk about that. What is a swing high and a swing low? So let me also just talk about that so that this makes more sense, because I'm probably going to use I'm gonna probably use okay. So I'm just going to try and draw my candlesticks, okay? Like just to make a point. So don't worry, don't worry, don't worry, don't worry, don't worry, guys. So this here is a setup. So I'm going to make this, let's say, we change it to, okay. Then I'm going to like, probably do this, and then probably do this, and then probably do this, and then change this back to that. So there are two things that we need to know, and I'm going to, so I'm going to put swing high. Okay, so because I'm sure you'll start hearing me talking about swing highs and swing lows, and you might wonder, what is a swing high and swing low? Okay. So, and it's relevant when we are plotting the Fibonacci tool on the chart. So the swing high, now assume these are candlesticks. We are in, maybe we've been pushing up like this. Okay. We've been pushing up, so we've been on a bullish move up, and then price began to push down. It reached a resistance possibly at some point, and then began to reverse. Okay, now this candle, so these are candlesticks. They don't have wicks, so this is just purpose of this example. So price moved up and now is moving down. So this candle here is a swing high. Why is it a swing high? Because the close and the open of these candles are lower than this one here. So there are there's one candle on the left and one candle on the right that are lower than the middle candle. So that's the swing high. This is a swing high. Now, swing low is the opposite. There's this bearish candle here, which is the last bearish candle. And then there are two candles. One is on the left, one is on the right. So this probably was pushing down, price stopped here, and then the bullish candles began. So a swing low will be found at the end of a trend down. Okay, and a swing high will be found at the top, at the end of a bullish trend. Downtrend, uptrend, bull trend, bearish trend. Does that make sense? So this here is the swing high candle, and this here the swing low candle. Okay, so I just needed to mention that because, so let me just clear the screen. Let me just remove that. Now, we are now talking about the fib tool. So the fib retracement tool, as the name suggests, allows you to see or anticipate retracement of price. Okay, and in the class of market structure, I'm going to go deeper into the anatomy of price, so don't worry about that. But for this purpose, I just want you to understand what this tool does. So I'm going to take the Fib tool here, and then I'm going to zoom in. Hold on. I'm going to look for a swing high or a swing low. So we can see technically this is a swing high, this is a high or a resistance, support, and they're relative. Like I said, we have many support and resistance in between, but I'm looking at the obvious ones. This one is high, low, high, excuse me. And this is the significant, resistance, support, and so on and so forth. Now, when I zoom in, what do I see? Let's zoom in. We're looking for the swing high. This is a swing high. And there's a candle on the left and a candle on the right. So this candle is a swing high. Let's see something else. This here is a swing high, left, right. But this is not a very significant one. This is the significant one because this is what now formed a rally down or a breakdown of price. Like it's obvious. Okay, this was still pushing up despite this pullback. Then we can see another swing high here. There's a candle on the left, candle on the right. There's a swing low here, candle on the right, candle on the right. Swing high here, candle on the left, candle on the right. Swing low here, candle on the right. Here, candle on the right, candle on the left, candle on the right. This is a significant one. Swing low, candle on the left, candle on the right. So when I talk about swing highs and swing lows, that's what I'm mentioning. Okay, so now you're going to take your Fibonacci tool and on any swing high, drag it to a swing low or vice versa so that you can see what happens. So I'm going to pick the tool again, Fib retracement, and then I'm going to come here, swing high here, and I'm going to look at the significant swing low. So I'm going to pick this one here, right? Can we see? Now, what do we see? What we see is this swing high actually formed this swing low before there was a retracement. Okay, so price pushed down and then retraced back up, or pushed down and then reversed. Okay, so even if the reversal was in a gradual form, it reversed. Okay, so if I was to draw a line like this, we can see clearly we are on. This is a downtrend, a reversal, and then we have what we call a continuation to this swing low. Okay, so hopefully that makes sense. Now, when I look at the Fib, let me just remove this so that my chart is not so messy. What do I see? What do I see? I see swing high to the swing low. Now price pushed down. Now as it's pushing down, let me just do that. I want to kind of, right. Yeah, I want it to be on the right so that we can see this a bit better. Okay, so now we can see this a bit better. I think I've just taken it back to where it was anyway. Swing high, swing low, price pushes down. Look at the 0.5. Now this 0.5 is what we are calling the 50% retracement level. So when price reached here, guess what happened? It bounced off this zone. Okay, so these Fib levels are usually reaction levels where you find that price bounces off those levels. Okay, so we can see it ranges from 0. We have 0.236, 0.382, 0.5, 0.618, 0.786, then 1. Okay, so this is 0%, 23.6%, 38.2%, 50% level, and then 61.8, 78.6, 100%. Okay, so it's from 0 to 100. Okay, now price pushed down, and then when it came back, it retraced and bounced off the 50% level before continuing. Does that make sense? So when you're trying to think, okay, so where is price going to reject? It could reject at the 50% or the 38.2%. Now, if it goes here to the 38.2%, it just shows that the momentum down is quite strong and price is likely to continue. If it bounced aggressively off of the 50% or the 618 or the 7.86, we would likely see a continuation to the upside. So let me repeat. Price is moving down, okay? It has broken the 78.6, 61.8 or 0.618, and then it's gotten to the 50%. It rejected off of this level, but not as much because it just began to drop lower and it almost got to the 0.236%. Now, this was an indication that we are still going to continue to go down. So I hope, guys, that's making sense. So technically, if price is above the 50% level, okay, then from this move here that moved up, chances are if price just came to the 618 and bounced, it was likely to continue to go up or anywhere above the 50%. But if it goes below that, then there's a confirmation that we are actually still bearish. And you can see that we broke that, came down, we still retraced, yes, but we dropped. And when we dropped, it was a significant drop. So that's how you can use the Fibonacci tool to kind of give you an idea, or as a confluence, as an additional indication of where price is headed to. Okay, so for example, this is on the daily time frame. Yeah, so for a couple of days we were bearish, and then once we got to the 100%, you can see we bounced off, we pushed up, and then we began to reject at the 0.5%. Now, if we had gone way above, you see, this is just a wick. If this body of the candle had gone way above the 50% and the 618, we would anticipate a continuation to the upside. Okay, but because we remained below the 50% and the 38.2%, and we are still bearish. Okay, so let me see. Let me drag it to this swing low. What do we see? Again, price rejecting off of the 50% and the 38.2 and then pushing up. Okay, so this rejection here, it pushed up and then it continued to the downside. Okay, so the first level it bounced off was a 618, but then it was below that. And then we went below that. So once we moved below that, whatever retracement here was just a retracement, okay? We were still bearish. Why? Because we crossed the 50%, which is a very, very strong level usually. Okay, hopefully that makes sense. So that's how we know. So we know that if we cross below this, we know there's a potential turning point. Now, you're not just going to trade the Fibonacci tool on its own. You're not just going to trade it on its own, like I've been saying from the beginning. You're going to combine what we've been talking about, the chart patterns, okay? So you're going to see, is there a wedge pattern, okay? Descending wedge, is there a triangle pattern? Is there a multiple top and bottom kind of thing going on? And what we see here is multiple bottoms, okay? So bottom one, bottom two, and what we see happen, there was a rejection, okay? And we had, so that's one. But if we incorporate the Fib tool, we know that we've already crossed the 50%. So we are not even thinking of a major rejection. We're just seeing this is a retracement, but we are likely going to be looking for sell positions because we crossed below the 50%. So even if we see this wedge pattern here, this is just a short-term reversal. The wedge pattern is confirming a short-term reversal. The Fib is telling us, yes, we are reversing, but we should be looking for selling positions, okay? If we had crossed way above the 618% or the 786, then we know we are still going to continue to the upside. So this is a daily time frame. So remember, every candle here is a day. So these are several bullish days. If I was to take my measuring tool and I take it from here to this swing high up here, 56 days, and we did 560 pips to the upside. That's a lot. That's a lot. If you did the class on calculation of pips, if you're on a micro lot, that's $56. If you're on a mini lot, that's $560. And if you're on a standard lot, that's $5,600 that you have made in the market in 56 days, technically. Okay. So this is a significant move. Significant move. Now, let's dial it down a bit. I'm just going to look at, let me say, let's look at even this. There was this swing high here, or let me look at this swing high is a result of this swing low. So there's this swing high up here that formed this swing low here. Okay. Now what do we see? Price dropped and then it tapped the 38.2. It didn't even get here. So this shows us a very strong bearish momentum trend continuation. Okay, hopefully we can see that. Let me see another. Let me even look at a bigger trend. If I am to look at this, this is a significant swing low. So let me pull this from up here to maybe down here. What do we see? Price barely moved above the 236 level, confirming the continuation to the downside. So that's how you can use this, the Fibonacci on a very, very basic level. So that's on a downtrend. What about an uptrend? Okay, on an uptrend, on a downtrend, you take the fib from the swing high to the swing low. On an uptrend, you take it from a swing low to a swing high. So uptrend, we want to look at the swing low. This is a significant swing high. What do we see? Price broke the 50%. So guess what? We are bearish. If it stayed above the 50 and the 38.2, we'd be looking at considering continuations to the upside. Okay, makes sense? Okay, let's take another. So from this swing low to this swing high, what do we see? Price broke through the 50%. So in as much as it retraced, we are still continuing to the downside. Okay. I hope this is making sense, guys. From this swing low, let's say this one to this one, the swing high, the significant one, we stayed above the 50%. So we are technically still bullish. Now, on top of that, what did we form? We formed a double bottom. Hello. And if I was to draw a triangle pattern here, possibly I'd get one. Okay. No, this is probably a wedge pattern because it's diagonal. Yeah, so sorry, I wanted to pick this. So I'll take the significant swing high. So you can see this is a wedge pattern, which shows a reversal. Okay, and so the reversal plus the fib are both telling you that we are still continuing with this trend. I hope this is making sense. We have the fib, which stayed above the 50%. And then we have a pattern, double bottom. And then we have a descending wedge. Those are three confirmations that we are still buying this market. Repeat. Fibonacci from swing low, significant swing low to the final swing high. Okay. It retraces, but it doesn't break below the 50%. And then when it retests, it forms a double bottom. So fib 1, double bottom 2. And then guess what? There is a wedge, descending wedge pattern. So what are we expecting? A buy. So you'd now be zooming in here to look for setups to enter the market for a buy. So that's basically how you can make a trade setup. So let me look for a potential reversal trade. Let's look at this one. Now with this one, this is, what are we seeing? We are seeing a swing high to a swing low, okay? Price pushed up above the 50%, confirmation 1. okay, that we are possibly going to start buying. And then confirmation 2 is this wedge, ascending wedge story. I don't even know if that's a proper wedge. It could be higher highs with, so that's why price continued pushing up. Okay. We have a bit of a double bottom here as well, or a multiple bottom here as well. Okay, and price pushing to the upside. One more example, and maybe this will then come home. Swing high to swing low. We broke below the 50%, so I'm still bearish. And when we broke below the 50%, when we came down, we actually, formed multiple tops here. Remember, this is a daily time frame, so these are multiple days. And then we broke down. Now, when we got down here, okay, when we pushed up, so let me take, let me do this. When we pushed up, we pushed past the 50%. So chances are we are going to start looking for potential buys. So when this, actually, wait, guys. We reached, this is 0 to 100. We actually retraced all the way to the 100%. And then when we pulled back here, we did not break the 60% or the 50%. That's why we retraced. We formed a double top. And then finally, we broke through the 50%. So this is a confirmation that we are still bearish. So you're looking for potential sells. Okay. So that would mean you'd wait for the retest to end and then this sell happened. Okay. So there are other things to help you begin to think of potential selling, where to sell. And I usually teach more advanced things in my coaching program, my 12 weeks coaching program. So you can, if you're done just testing out these basic concepts that I'm teaching in my YouTube series, you can decide to enroll into my coaching program, my 12-week session, and I can teach you more advanced techniques on how to enter the market. But just with this Fib tool and the patterns that I've talked about, you should be able to anticipate moves in the market. So they're usually on trending. You usually use the Fib tool on a trending market. So this is not really a significant trend. I don't even want to use it, but this would be a significant trend down. Okay. And we see we did break structure here. We retraced, but then we dropped again. And when we retraced here, we hardly went above the 50%. So there was a nice selling potential there, and that was about 177 pips, which is quite something. Okay, so guys, I don't know if I should look for one more and then we can call it a day. Now let's look at this up here. Swing high, swing low. So take my Fib from the swing high to the swing low because I want to see the retracement. It hardly did anything and it just dropped. Okay, continuation. Look for another one that's random. Swing low. Let me take this one. Swing low to, let's say, swing high. I'll use this swing low here. To this swing high. What did we see? We retraced back to the 618. And even when we pushed back, so we were in selling territory, although we were consolidating. Okay, we pushed on below the 50%. So now you'd just be looking for potential sells. So once it pulls back, just begin to look for potential sells and you can sell. And even when it pulled back here, it just continued selling. But this is again a daily chart. So once it pulled back, when you begin to see the sells happen, like from this swing high, you just sell the market technically. And you can sell the market to the previous what? Swing low, which is here, and it reached here perfectly. Now, like I said, there are more advanced things that I will teach in my coaching program on how to know exactly how to enter the market. Okay, how exactly to enter the market precisely, with more precise entries up here. Okay, let's look at this swing low to this swing high. What do we see? We crossed the 50%, so we are bearish. Do I see any pattern? I see a triangle descending, I think triangle here, I believe. Even this could be it. And price dropped, descending triangle, right? So you can notice, and then this is a double bottom. So I've kind of, and even when you look at the example we used in one of our modules, this almost looks familiar. Double top, drop, retest, drop. This came from the bottom, pushed up, you know. So all these are very familiar the more you look at them on and on and on. Now, let me just say something about the tool. You can also customize it the way you want to customize it. You just double click on it and maybe make these lines. Let me go down maybe to the background. I can reduce the background. I can remove it completely. So you can see this line here doesn't have any background in case you don't like the colors here, or I can just add it again and maybe just make it not so obvious. Not so like something like that, you know. If I want to show the prices, this is just, you know, without the prices, this is just the ratios, okay? If I want to show the prices now, these are the prices in brackets. So the price, or when price is here, this is the level at which the price is at. If I want to do reverse fib, this is what I'm seeing. I can reverse it like that. I hope you see the difference. When I reverse, I don't reverse. Okay, so this is the default fib, okay? You don't have to change anything. You can just maybe change the background so maybe it's a bit clearer. You can use it as is, okay? So that's it for this Fibonacci series. Maybe I can do again one more. Swing low, swing high. The retracement was below 50. This one wasn't below 50, but this one, yeah, this wasn't below 50, but we still dropped, okay? Because it finally crossed below 50 here. As soon as it crossed, we were just continuing to drop. Now, let me see another one, maybe this one to this one. Now, when we retraced up here, we retraced above, no, this is it. From this swing high to this swing low. As you can see, guys, here we retraced above the 50%. So we're just looking to buy. And on top of that, we have ascending wedge pattern. Ascending wedge pattern. Boom. So those are the two confluence. I'm seeing the fib has passed the 50%. So I'm thinking of continuing to buy on this retracement. And then I'm seeing an ascending wedge, which is usually a sign that price is about to break out to the upside or continue to the upside. Maybe if I zoomed in a bit more, I would see a double bottom here, okay? So this here was a confirmation for the buy. Okay, so that's the third confirmation. So usually if you have 3 minimum confirmations about a trend or what's going to happen in the market, you can enter the trade. If they're less than 3, please just wait for a third confirmation, just so that you're sure about what it is you're looking at. And the fib is one of the ways you can actually have your confirmation. Again, this is very basic, okay? And you need to practice it on your chart over and over again. Even if you don't get it right now and you go to your chart and you get confused, just come back. The video is online for eternity. You can keep watching it over and over. So that being said, guys, thank you so much. I hope this video is of value, or this module is of value. And yeah, see you soon. Bye-bye.